6 minutes. Okay, so hello everybody. We're going to have our question and answer session right now, and we're going to actually go through and go over a couple of problems from Module 2 in Chapter 3, and then we are also going to take a look at a couple of questions in Module 5 that I've received. So let's first start with the Module 2 questions, and I'm actually just going to go ahead and pop up the solution key here for Module 2. So I know a lot of people had some difficulty with the graphs. Again, there are some excellent tutorials on how to make graphs out there on YouTube and things like that, so I highly encourage you to go out there and watch those and just make sure that you understand how to make a graph, because it's something that a lot of small companies rely on people coming in to be able to make graphs in Excel, make charts and graphs, because they don't have the fancy software that, just pops it out for you and, doesn't require you to do anything like this, okay? So it's always good to understand how to chart and graph things. So I really encourage you to go ahead and do that. I will post a couple of videos on how to make charts and graphs at a basic level, just to kind of give you that exposure as well. So, just watch them, obviously, whenever you can, and just, kind of take some lessons from that. I'm also going to post like maybe 1 or 2 videos on using Excel as well, so because I know some people are struggling with using Excel, and that's okay. When you haven't used it before, that's fine. So but make the effort to learn it, because you're not going to just need it for this class. Unfortunately, you're going to need it for a lot of classes and for your career. If you plan on going anywhere in business, you're going to have to know how to use Excel, because companies use it in some form or fashion across the board. So just make the commitment to go ahead and start learning it now. It will only help you, okay? And you'll find there's some really cool things that you can do in Excel, like formulas and things like that. I'm actually kind of an Excel nerd, so to speak. I like to even do my own personal budget in Excel and put in formulas and things like that, so that I don't have to go through and calculate it on a calculator, and I can see an analysis of what my financials look like on a monthly basis. So I treat myself like my own company in some ways, just trying to make sure that managing money, it's hard on everybody, but if you keep your finger on the pulse, you can do some pretty good things with it. So I just encourage you to, try to apply some of the accounting concepts that you've learned and even Excel concepts that you're learning, to your own personal, your own personal life as well. Okay. So some of the questions that we had, Cassie, you said on E319 parts D and E, right?
E319 part D and E, yes.
Okay.
I am not good at, or not getting, or something, anything that has to do with income tax required before, after, adding all that, I get totally lost somewhere.
Okay. What part are you getting lost on? Is it the calculation of the income tax, or where it stands, or?
Yeah, let's see, on D, I'm trying to, let's see, I don't have mine pulled up, I just have the solution page pulled up.
Oh, I'm sorry, you guys can't see my screen. Hang on. let me show you. Okay, here we go. Can you see my screen now?
Yes, I can see your screen. I just don't have mine, my work pulled up. And I'm looking at the book too. I guess it's just figuring out the income tax portion of it.
So basically,
like when it says sales volume required to provide an after-tax income of $200,000. I guess, I didn't get that. I don't even know if I answered that because I didn't even know. I just somehow blanked out on it completely.
okay. So you can see this 285,000 is actually the break-even point in sales dollars, right?
Right. Yes.
It's using that, right? So
Okay.
using that calculation part of it, right? So that's the current fixed cost, that 285,000, plus your 312,500, which is the required before tax income. So this is what was required before tax income.
And how did you get that?
So that is calculated by using this 200,000, right, divided by the 1 minus the 36%, which is the corporate tax rate.
Okay.
So that's the corporate tax rate that it was asking you to actually use. Okay. So it's kind of like a puzzle piece here. And let me see, let me get the book up. Just a second, flip over. Chapter 3. Okay, chapter 3. Exercises. Okay. Okay, so here's chapter 3. So you can see the 200,000 is the selling and administrative costs, right? This is the what dollar sales volume. In D, it's asking you what dollar sales volume is required to provide an after-tax net income of 200,000. So this had nothing to do with it. This is what the problem is asking you. It's saying if I need an after-tax net income. So you're kind of having to work, and this happens a lot in our problems. You kind of have to work these backwards and work into them, right? So it's giving you what it wants the final end product to be, but you have to get the numbers along the way. Does that make sense? So
right now.
it's okay. So this 200,000, right? So right here, it's saying, okay, this is what we want the required before tax income to be, okay, which is 200,000.
Mm-hmm.
That was given in the problem. So we're dividing that out to get what we want the after-tax income or the before tax income to be. So this is, I'm sorry, this is the after-tax net income, okay? So that
Gotcha.
the 200,000 is the after-tax. This is what we want the before tax to be, okay?
Okay.
So just think of it this way, 312,500 times 36%, or times 64% actually, is going to be 200,000, okay? So it's just working that part of it backwards. So like if you were taking your taxes yourself, okay, get, okay, so if you were taking your taxes yourself and you said, okay, that 312, really? I know what the problem is. Hang on just a minute. Just a second, guys. Okay. 312. And then you're multiplying it by 0.64. So equal sign. See what I did there?
Yeah.
Okay. So what this problem did is literally just the opposite. So this right here, you were given this, the 200,000, right? Because that's your before tax income, or that's your after tax income, and you're dividing it out the 1 minus the 36% and getting your after tax. Okay.
Okay.
So then the sales volume required to provide an after tax income of 200,000. Once you know that this is going to be your after tax income of 200,000, you can then take the 285, which is your current fixed cost, plus the required before tax income of 312, because that's what you're going to have, and divide it out by this 48%, because that's your break-even point in sales dollars that you calculated up here. Does that make sense?
Yes.
And then that's going to give you what your sales volume has to be in order to hit that after-tax income of 200,000. So basically, it's taking the problem and saying, okay, work back into this. How do you work back into this given, you know, these inputs, right?
Right. Yeah, it just, I don't know. I think I just look at the tax part of it, and I'm like, wait, what? And I remember in the first accounting class, anytime it was like FICA taxes or anything like that, I just, for some reason, get totally lost on taxes, or my brain shuts down. I don't know.
Well, in this one, for this particular chapter, just remember that you're basically talking corporate taxes. You're not talking, you know, if it states in there FICA taxes or what have you, it typically gives you the rate. But if you're talking corporate taxes, you know, in these examples, it's all been 36%. Okay. So, let's see. Did it give you what the... Didn't. So, assume 36% for these. Oh, it did give it to you right here. So there's where it told you your tax rate, basically. Okay. Okay. So that is, does that all make sense now for D?
Yes.
Okay. And then what didn't you understand about E?
Let's see. Like I said, I should have pulled mine up too, but I know that I circled on the solution portion when I compared mine to the solution. I understand, like, the concept that the variable costs are 52% of the sales, but I don't know how come I couldn't come up with the same numbers you did for whatever reason. That might sound really dumb, and I feel really dumb even saying that, but for some reason on the variable cost and the contribution margin, I did not come up with the same numbers, and I didn't know where I was going wrong on those.
It's because you likely didn't get this part right, so therefore this part was going to be wrong.
That's true. Yes.
If you didn't get this 1.2449792, then anytime, even though you would have multiplied whatever you put in here by 52%, it's not going to come out right. Right? So in order, a lot of these problems are also, if you miss one component of it, the rest of it's going to be off.
Okay, so basically, but it is right to take, you're saying, we are saying in that problem variable cost, you're taking the sales times 52%, right, to get that number?
Yes.
Okay.
But you
Okay.
have to take the sales volume, and you may well have taken this, the 1.2, if I remember correctly.
I think that I did.
So you may well have taken the sales volume up here, not realizing that you had to take this sales volume out of it, this new calculation of sales volume based on the 200,000, because this is one of those things that you have to pay attention to, what is the question asking. So in this case, the
Right.
question was asking you to take the abbreviated contribution income statement to verify that the solution requirement in D, right, will provide the desired after-tax income. So that's what the key to that was you had to get this answer right in order to get the rest of this right. And you had to use this 200,000 of after-tax income to get that, which meant you had to use this sales volume that was required, and then get your variable cost based on that sales volume, your contribution margin based on, that sales volume, and then your fixed costs stay the same because fixed doesn't change, right? Fixed is always going to be fixed, okay? So the fixed doesn't change. Then the net income before taxes is, would then be off if you hadn't gotten this part up here. The income taxes, again, we know are 36%. So 312.5 times that 36% should be 112,500, right? And then that gives
Right.
you net income.
Okay.
So it's basically, E was basically proving this out right here.
I see that, yeah. It makes more sense now.
Okay, good. Good. Okay, I know somebody else was having problems on E325. I'll get to 329 in just a minute, Cassie. So the question was, again, this is one of those problems that if you're not getting parts of it, then the whole thing's going to be wrong. Okay? So each case had to be calculated, and it was one of those, you had to work your way back into it. So let's take a look at the problem of E325. Okay, so in case one, it gave you 120, 60, and 30. You had to come up with the net income, the variable cost ratio, the contribution margin ratio, the break-even point, and the margin of safety in dollars. Okay, so in order to do that, so you had 120,000. We knew that the contribution margin was 60,000, so that meant that the contribution margin ratio had to be 50%. Because when you divide these two out, what do you get? 50%, right? The fixed costs we knew were, or the net income we knew was 30,000, so that meant that the fixed cost, by nature of all of this, had to be 30,000. Okay, so the variable cost ratio has to be 50% because your total ratios here between the contribution margin and the variable costs have to total 1 or 100. Does that make sense? You see that across here? And then the break-even point, obviously, is going to take fixed costs divided by the contribution margin ratio, which we know right here, okay? And that's going to give us our break-even point of 60,000. If our break-even point, the margin of sales, or the margin of safety is the dollar sales less the dollar break-even point. So the sales revenue minus this break-even point dollar, right, is going to be our margin of safety. So in each case, you were given different scenarios, right? And I think the question that someone had was on case 3 and 4. Well, case 3 and 4, you were given the contribution margin was $20,000, the net income is $10,000, right? And your contribution margin ratio is 40. So we automatically know if this is 40, then this is going to be 60, right? So if 40, 60, total of 1, right? So you were given 20,000, you were given 10,000, okay? So if this is 40, right, then we multiply our sales to get this 20,000, so we can divide that. We can divide the 20,000 by 40 to get our 50,000, to get our sales revenue, right? And so our net income was 10,000, so that means this had to be 10,000. Our fixed costs had to be 10,000. Okay. So it's just kind of working that puzzle piece again, right? So we've got the fixed costs are now 10,000. We can get our contribution margin ratio in there. We know it's 40. So our dollar break-even point is 25,000. Our dollar sales less our dollar break-even point, 50 minus 25, is 25, right? So this again is puzzle pieces. Does that make more sense? You guys with me on that? Okay. All right. Then let's go on to 329. On 329, okay, so on 329, Cassie, this is where you said you were a little confused.
Yes.
Okay, so sales is the 3,000 times the $85. So where we got that, get down to the problem. Oh, there it is. So you have ticket prices are $85 a piece. Let me pull this over so you can see. And they provided 3,000 tours. So
Right.
you can get, obviously that's going to be variable because those are, you know, you can have a varying amount of tours provided, right? So that's the first part, the 3,000 times the 85, okay?
And I think I got that, but for some reason I didn't think about like admission fees, lunch, and all of that. I didn't even consider multiplying those times 3,000 as well.
Okay.
I don't know why it didn't occur to me, but I totally didn't do that.
I got you. So yeah, so that's, in order to get those variable costs, you had to take the 3,000 times each one of those, right?
Right.
So that gave you your total variable cost, and then, of course, gave you your contribution margin, right?
Right.
Your fixed costs are fixed, so you had operations and selling and administrative that total up, so your before tax profit then is only $20,000. Your income taxes in this problem were 40%, okay, so you multiply that 20,000 by the 40%, get $8,000.
And how did we know it was 40%? Oh, because it says it at the bottom. Duh. Okay.
It said it right there. So, okay. Again, you really have to read through these problems because some of them, I mean, they will literally have the minor details and
I know.
really an attention to detail subject. So, so does that one make more sense now?
Yeah, I like totally blanked out on that one. Yeah.
Okay, not a problem. Okay, so now we're going to move on to Module 3. All right, and I am going to go over, Kim, your problem. Let's see. Hang on a minute. Let me get the email back up here.
Is it bad that I haven't had a chance to watch the Module 3 webinar yet, so I wouldn't even know if I had a question?
Well, I try to tell everybody that they should probably watch it and try to, you know, gather their questions before this, obviously.
Okay.
You know, so I usually try to encourage, okay, start of the week, Sunday after you finish your quiz, get started on the next module. Go ahead and watch the webinars first because they're going to walk you through how to do everything, right?
Right.
So, you know, read the chapters, watch the webinars, you know, get familiar with the module, and then Monday, try to work the problems, come up with any questions. You know, if you're having problems, then obviously we can address them on Tuesday. Okay? That's why I try to get you to send me the questions on Tuesday because it still gives you 2 days to really digest and prepare and get your homework done. And we answer the questions tonight, that way everybody has access to it, right? So it's kind of, it does, it forces you to pre-plan and to get going on it because some of these chapters are much harder than the others. Okay, some will be very easy, some will be more difficult. Okay. All right, so Kim, your math isn't working because the numbers that you're using are not necessarily correct to start. Okay? So let me, just a minute, let me set something up here for you so you can see. So this is E521. Okay? So in A, we're gonna get our raw materials inventory. Okay? So, okay? So we've got our activity, and we've got our given information, and I'm just breaking this out for you so that you can see kind of what you have to solve for, okay? So this again is a puzzle, right? So the activity, we know our beginning balance, okay? That's given, it's 70,000, okay? And I'm going to go to the problem to show you this. Okay. So here's the problem. Okay, it's got data on Cascade Manufacturing Company for the fiscal year. Okay, they want you to in A determine the cost of raw materials purchased. Okay, so it gives you your beginning and ending inventory. So you have those two numbers. Okay, you also up here have the raw materials that were used. Okay, so what you have to find is the total available raw materials and the purchases. Okay, so the easy way to do this is to just work it backwards. Okay, so on this, sorry Kim, I'm trying to read. Okay. So the given information is you got your beginning balance and then plus your purchases. Oops, if I spell it right. Is going to give you your total available. Okay. And then you're going to have your raw materials used and your ending balance. Okay. So we know that the ending balance is 80,000. We also know that the raw materials used is 400,000. Okay. So that means that in order for this to work out, and this is, remember, subtracting out the raw materials used. Okay. So in order to get this 80,000, what does this number have to be? Do you know? Yep. Got it. Okay. So this has to be 480,000. Okay. And then for this to be 480,000, what does this have to be? Because you're adding that and this together to get that 480. There you go. 410. Okay. So that's how you're going to go about working A. Okay. Then B is a very similar exercise. Okay. So for B, you're going to get the current manufacturing costs. Okay. So you've got direct materials, you've got direct labor, you've got manufacturing overhead, okay, and you've got a total. Okay, so those are the three components that make up current manufacturing costs. Okay, so we know that direct materials are 400,000, right? Because it says so. Okay. So direct materials are raw materials used. Okay. So that's where you got that 400,000, right? Then we know that manufacturing overhead is 60% of direct labor costs. Okay. So we have to find direct labor, and we also know that the total manufacturing costs are the 731. Okay, so we have to pull out the knowns. All right, in these problems. Okay, so we know this is 731. Okay, we know that this is 60%. Right. So okay. So here's how you're going to do it. You're going to take the conversion cost of 731, oops, minus the 400,000. And that's going to give you your conversion cost. Okay? Your conversion costs can then be used to show what direct materials plus manufacturing overhead are. Okay? So this is how we're figuring out what our direct labor is. This is the reason that we're doing this. Okay? So basically, conversion costs are going to equal direct labor plus manufacturing overhead. Okay? So direct labor, from there, we can gather this, direct labor plus 0.6, which is that 60% of manufacturing overhead, direct labor. Okay? Oops. I'm going to take that off. Okay? So what this amounts to is whatever we get up here, which you do the math up here, right? Yep, 331,000, you got it. So basically 331,000 divided by that 1.6, okay? Because we're basically taking 100% of the direct labor, or 100%, yeah, 100% plus that 60%, okay? So when you divide that out, that's going to give you your direct labor, okay? So the direct labor cost is right, right there. Once you have that, you can figure out what the direct materials are. Does that make sense? Yep, you got it, Kim. Okay. Does that make more sense now that I've shown you that? You had trouble with D. Okay. All right. So let's go down to D, the finished goods inventory. Okay. So this is part D. Just a minute. Okay. Okay, so finished goods inventory, again, you're going to do your activity, which is going to be beginning balance, plus the cost of goods manufactured, okay, which is going to give you your cost of goods available, typing is good, for sale, okay, and then you're going to subtract out your COGS, cost of goods sold, to get your ending balance. Okay? All right, so let's talk about what we know. The givens, so this was given, The givens were your beginning balance was $90,000. Okay. Your cost of goods available for sale was given at $936,000, and your ending balance was $110,000. So, in order to get this, basically what you're doing is you're, again, working out the puzzle pieces. Okay? So, in order for this to be your ending balance, what does this number have to be? Exactly, 826. Okay? In order for this number to be true with this, what does this number have to be? Okay. She's saying I pulled it from C, which is why I don't balance, or don't equal. Okay. She got 786,000. So the cost of goods manufactured in C, the work in process, right? So that's your 786 in C is correct. Okay. But for D, the 846, doesn't obviously work out. So you have to treat D separately because your work in process is a different calculation than your finished goods. So the work in process is based off of these numbers, right? Your finished goods are based off of these numbers. So it's a different calculation. Does that make sense? Okay, good. Yeah, because work in process is going to be based off of your beginning and ending balance based on this particular set of data. Your finished goods is going to be based off of this particular set. Okay, and so for cost of goods manufactured, you have to use your work in process. For cost of goods sold, you have to use your finished goods. And that's one of those things that you just kind of have to know from the reading and stuff like that. So does that make more sense? Yeah, yeah. And that can happen, you know. Yeah, that can happen where, you know, you're thinking that, you know, you have to use all of the stuff from the previous problem, and you don't always. So that's just kind of one of those things. You, again, kind of got to read it and determine which way to go with it. Okay. All right. Did you guys have any other questions, or was that it?
Yeah, so I still got 846,000 for that. Is that not right?
Yeah, 846 is right.
Oh, okay.
Yeah, 846 is right. But what Kim was saying was she used, so in C, it's not the right one. In C,
right, the C is the work in process, so you have to use the two different beginning and ending balances.
Right, because the work in process is got the different beginning and ending, right?
Right.
So, yeah, that's what changed it.
Tricky.
Okay. You guys good? Is it possible to get the net income from the income statement on E522 to verify our answers? Never hurts to ask. Yeah, so the net income on the income statement for E522 is $36,000. Okay, so if you can figure out and work your way, sorry, if you can figure out and work your way down to that, then you should be good. Remember, you got to get, so that's one of those that is going to flow down. So you gotta go up at the top and get all your current manufacturing costs. So your cost of materials placed into production, your direct labor, your manufacturing overhead, then your work in process, your total costs in process. As a work in process as of 8/1, your total costs in process, your work in process as of 8/31, and then your cost of goods manufactured. You know, to get that first. Then you can come down and get all of your income statement, which is basically, you know, using your sales, your cost of goods sold, get your finished goods inventory for 8/1, get your cost of goods manufactured, which is the part that you figured up in the first part, okay? Then get your total goods available for sale and your finished goods inventory as of 8/31. Okay, so that's going to give you your total cost of goods sold. Okay, that subtracted out from your sales gives you your gross profit. Subtract out your selling and admin expenses, and you should come up with a net income of $36,000. Okay, don't worry, you'll get it, and it'll make sense, especially when you see it. Okay, but keep asking questions. I don't mind going over, you know, the previous module if you're having problems understanding it and understanding how you get it. Okay, so just keep asking those questions. That's good, because I'm sure you guys aren't the only ones that have those questions. So I just want to encourage everybody to continue asking questions. Shoot me emails. If you don't understand even a previous module solution set, which you should be reviewing, to ask the question and we will go over it in the next Q&A. Okay? So if there's something that's just not clicking, please, please, please ask. Okay? We are in Module 3. Next week will be midterm week. We're already there. Okay?
I might not.
So just make sure that you're asking questions. Okay? You've already got access to the midterm. You can go look at it and see what it's like and see what...
Oh, I've looked at it. I've printed it off. I've done all that.
Good. Good. So just make sure that you're looking ahead and you're, you know, seeing what we're working towards, and make sure you understand how to work these problems. Okay? You'll be fine. I have no doubt. Everybody's putting in the work, doing a great job, you know, and working to understand this stuff. So very happy, very pleased with your work effort, and just keep it up. Keep turning things in and keep doing your best. Okay?
Sounds good. Thank you.
All right. Thanks a lot. You guys have a great week, and we'll talk to you later. Okay? Thank you.
You too.
All right. Bye-bye.